Welcome to the investment markets overview for the week ending the 13th of January 2023. US CPI for December was reported at -0.1% and 6.5% annualized versus November's +0.1% and 7.1%. Investors loved it, piling into stocks, bonds and just about any other asset class, except the dollar, which gave up 1.6%. The rationale for the bullish sentiment is the Federal Reserve may reduce the pace of their interest rate hiking, or even pause for a while, allowing business as usual. Higher stocks and lower interest rates. However, that cycle appears to have ended. Market interest rates have been rising since mid-2020, reducing global liquidity and pressurizing companies, individuals and governments' ability to service record debt levels. Low or negative inflation increases the carry cost of servicing debt. For example, a 15% interest rate with inflation at 11% equals a real cost of 4%. A 30-year U.S. mortgage at the current 6.4% less minus 0.1% equals 6.5%, or over 62% more. The overview includes the performance statistics for the main stock indices, which were higher across the board, as were the cryptocurrencies and the commodities covered. Whilst sovereign bond yields were lower in the main, although Japan's 10-year yield spiked higher once again. Meanwhile, the regional coverage points out the deflationary trend for U.S. rents, the UK mortgage rate and the effect on house prices. Whilst out east, China's hidden government debt is exposed. So, further signs of falling inflation and possible deflation are appearing across the globe. Returning to the important U.S. numbers, we can note three measures of falling U.S. inflation: CPI in blue, PPI in green and the Federal Reserve's preferred gauge, the brown PCE core CPI reading, which excludes energy and food. A fourth and perhaps more important measure of inflation is leading the way lower, the M2 money supply shown in red. The money supply is contracting not just in the US, but across the globe, possibly setting us up for a deflationary debt bust. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview published at least 40 times per year. Just follow the links provided for the overview and the latest investment timing solutions provided.